Bitcoin today should be at 160,000. So that's the discount we are to fair value according to liquidity. So that was the feature of the year. It was a technical year because of what happened. It should have been a lot stronger finish to the year. But what we do know is we've got a lot of liquidity coming in 2026.
Before we tackle all these topics, I mean...
And also just to go back to that, is the other thing people struggle with in their heads is, yeah, we can talk about Bitcoin, and Bitcoin was pretty flat. But then anything further out the risk curve gets hit more. And so, memes went down 99%, more speculative stuff goes down 90%. The kind of newer stuff that's still high quality goes down 65%. Solana goes down 55%. ETH goes down 40%, and Bitcoin is flat. It's that whole thing, and that's what really kind of hurt everybody.
There was one asset in the last quarter that actually did well, which was called Zcash. But then the entire dev team today announced that they will quit Zcash and start a new project. So that one is also starting to fumble.
Well, the issue is if there's no new liquidity coming in, you get a rotation of liquidity within for people searching for the next narrative. So Zcash is still yet proven to see whether it was just a rotation or net new capital coming into a new idea. I happen to think it's probably a reasonable narrative, and I'm sure something gets resolved with this team leaving. I don't know the full specifics yet, it's just coming out. But the narrative makes sense that privacy is going to be an important part of this. So let's see how it plays out. But right now, it just sucks out capital from one part of the market, sticks it into the other part of the market, because there's no new money coming into the crypto economy, really.
Mm-hmm. Yeah, I mean, I've been to New York last year at SmartCon, and all the big institutions want to have some sort of shield or privacy when they want to be on chain. They don't want everyone to see their transactions, so it's being built, but it just simply takes time. And I think Zcash took the narrative and basically took it away, including Naval and all the things that have been happening with the big guys talking about Zcash. But before we dive into crypto, last quarter we've seen the biggest move in silver and gold pretty much in 40, 50 years. What's the story behind that run, in your opinion?
So that run is gold almost exactly mirrors financial conditions. And how we measure financial conditions is a blend of the dollar, interest rates, and oil. And gold has been following that. So we had a big easing of financial conditions. Gold follows it, silver lags a little bit. But what it is actually doing is gold, there's the chart that I've shown in the past, and I haven't got it here in front of me, of interest payments that are due for the US, and it goes vertical because interest rates went up and all of the extra debt from the pandemic. Gold is following that path up because we need the liquidity and the financial conditions to pay that. Bitcoin lags gold. And so what you've got, and so does liquidity. So you've got the interest payments ahead, you've got gold and financial conditions, you've then got liquidity, and Bitcoin lives at the liquidity level. So they're all the same map. It's a roadmap to where this is all going.
That's, I think, the first half of the year, the most spread out chart came from you on Real Vision with the M2 supply and the price action of Bitcoin. And it took over in the last few months where the narrative shifted into gold needs to top first, because every time it did it in 2016 and 2020, that was the trigger for Bitcoin to actually start doing well, but also for the so-called alt season to start to occur. Is that, in your opinion, also what we need to have in order to actually see a risk-on appetite?
It's coincidental because financial conditions top before liquidity does. So that tends to be the end of the cycle. And what we do know is that the gains in crypto tend to be towards the end of the cycle. So it's coincidental that that happens. It's not a prerequisite. There's just a lag between, there's like a 6-month lag between gold and liquidity.
How,
So that's generally how it works.
how does, just generally speaking, I know that you have a way better understanding of the business cycle and all the metrics and PMI data. Earlier in the week, the PMI data came out more positive, so that's a good sign. But if 2026 is going to be another year where the PMI is not going to go up, what went wrong?
I mean, if you listen to Scott Bessent, Donald Trump, and all the administration, they're all saying they expect huge growth in 2026. And they know that the growth has to come from businesses. And so the focus is on that. All of our forward-looking indicators suggest that growth explodes in 2026. We've got fiscal stimulus, and they keep adding to it. I mean, there's more and more things to fiscally stimulate. We've got interest rates coming lower as well. We've got liquidity coming into the system via the banking system, because they may change the regulations of the banking system. All of that flows into businesses. So we should see a very strong ISM in 2026. They need it to win the midterms. It's an imperative for them. And the good thing is we have a macro hedge fund manager running the treasury. So he understands the game. So that is the game. So the entire game is to drive up Main Street in terms of earnings and success. And that is the ISM. So the ISM is the manufacturing, but that's the jobs. That's the people working in car factories. That's all of that. It's not so much the service employees and the service sector. They're giving them a break too by cutting the tax on tips. It's a big deal because in the United States, unlike in Europe, these guys get minimum wage and actually make their money from the tips. So you're giving them a huge tax break. So they're really trying to juice all aspects of this. They've just done something that's just announced today. I think Scott Bessent announced again about cars, and that interest payments on cars are going to be tax deductible if you buy a car between 2025 and anything bought between 2025 and 2028. So what does that do? It's going to drive people to buy cars. What does that do? Increase the ISM, because the cars have to be manufactured in the United States. So you can see that all of the signals are there. They're all talking about it. So it would be a bizarre world if the ISM doesn't turn up. It would be never in history, and would mean the economy's entirely broken.